Good evening. Ira Epstein of Linn & Associates with your metals market update for this Thursday evening, the 22nd of October, 2020, just getting on to 6 p.m. Central Time. You're in a turn. So right now where the market's at is it's all led up to tonight. Why tonight? Because of the debate. Everybody wants to see, can President Trump deal a knockout blow? He's got the fodder here. We have Hunter Biden, and remember, they went after the president's family for 4 years in Congress. Now he's got some ammunition. I expect, like a hound dog, he's not going to let go. I think this is his opening. He's going to try to go for it, and we'll see what happens. Does he get anywhere with it? Well, that's why the markets, I think, are stalling. When we think about the metals, you had a break recently that got the market down to 100-day averages in the silver and the gold, and it hasn't come back to challenge it much. That average has been climbing up. I was just on Australian Sky Biz, if you will. They now call it, I believe, Australian Biz. And I was mentioning, you know, if you look at a key market, it's telling you things are good, and it's copper. Copper's gone this year from, what, 185 or so back into the 320 area. That's a pretty big number, and it looks good. They asked me questions on inflation, and my idea on inflation is simple. It's coming now. It's coming with whatever's going to happen after this election. If President Trump is in, he'll still be for spending, maybe not as much as a blue wave would do, and because you realize if Vice President Biden wins and he would get the Senate, how much spending is going to go on? It's not will there be spending, how much spending will go on, and what's the Fed going to do? They're not going to curtail it, they want it. In fact, it's not just American central bank that wants it. All central banks want inflation to pick up. The last thing the major central banks are going to do is curb inflation. They want it to get going. They want fiscal spending. They want governments to do things. They want to get out of this malaise, and that's what we're headed towards. So in the end, you've got to think, is there anything there in the metals that are deflationary? I'm not seeing it, but that's the big picture. Let's go to the daily picture. On the daily picture, we went from 2010 to the 1858 level, and we've come back up to 1924.60. The market was unable to close under the 18-week average. I call that the line in the sand. Be it an 18-day average, an 18-week, an 18-month. That's my line in the sand. Markets like to go to key moving averages to see what's there and decide from there what to do. So as we got down to that, we've given the market a rally, and in all fairness, it's gone up back about $60 in the market. When you go to the daily bar chart, you can see it's a lot of nothing going on. We had that one swoop down, and then the market has come back. Remember, the other chart was closes only. This has the highs and lows as well, so it's a little bit different. What's the pattern on the chart? There is none. You have a pattern of a higher high and a lower low. That is not a trend. So no trend at this point. Where are the moving averages? You're right at that 18-day moving average. I call that the line in the sand. And support is the 100-day, which you get close to, but you haven't hit just yet. What about the black lines called Bollinger Bands? Well, what Bollinger Bands had been doing on this break, they had widened out, and now they have narrowed and narrowed and narrowed in to the point where they're entering a tunnel. There's about a $50 range between the high band and the low band, and the market's spinning within it. Now, the tighter that tunnel gets, eventually it breaks out. Think of a spring inside of a tube. If the spring is made of the right metal, it's never going to break. It's going to burst out of the tube one way or the other, and that's what this is. So I wait to see which way it wants to come out. Momentum not telling me much of a story. It's pointing down slightly. The bias of the market is down. The market's under the 18-day average of closes, but I don't have a trend, and I have two layers of support. If you break at 1893.70, the 100-day average, and the lower Bollinger Band, 1887.30. Could out of this right now a trend develop? No. Neither upside nor downside. You need more chart work to get that. What about the gold-silver ratio? Still likes the silver over the gold. You're not rallying up, you're falling back down under this 18-day average. So we got way down here into the high 60s, came back up here into the 80 level, and now we're back into the 76, 84, gradually drifting, which means silver should be stronger than gold. And take a look at the chart picture. You have an uptrend. You have higher lows and higher highs. That's an uptrend. Momentum, sideways, bias up. So if the pros are buying here against that 18-day average, what's the last break low that we had? Well, if we look at this one, it's 24.40 and a half. We then come up, we held here at 24.46, back right now to 24.81. So if the pros are buying, and I'm not saying they are or aren't, I'm saying that right now the trend is up. If they're going to support the trend, then the buy zone's 24.44 and a half, and you don't want to get under the 24.40 area. That's not bad. And everything's still bullish on this chart. When I come to copper, the first thing I tell you is when you get up to a Bollinger Band, the first time you do it, it's often proves to be an area where the pros have taken money or in the process of taking money off the table. Just what I think. But this is still a very bullish chart. It doesn't need the swing line, which has a higher high and a lower low. It has the embedded reading. Get the red line to close under 80 and you get an indication that this market wants to head back towards the 305 and a half zone, the 18-day average. Don't do that. 321.45 the next target. Now, if that market holds on and goes up, sort of telling me that good things are happening in the economy. So that's a tip-off for me. In the platinum market, we're in an uptrend. We have higher lows, higher highs, momentum up, and bias up. So until this market breaks through this low, not this one, the only thing we really know is that the low right here turned out to be at 852.10, a real low because the market came back, and now we're fighting with it. It's a lot of risk, though. It's $30 in that market. Most traders look at a $30 risk as big. So I don't know if you'll get anything here, but my bias is certainly up, and until you get under that, I have every reason to believe 901 and a half is the resistance zone and supports 880.80. In the platinum market, still acting bullish. The market keeps finding support at the red line, the 18-day average, tried the upside, pulled back from yesterday right into support where it held. I think the pros bought it. And they don't want to see this market right here under 23.42.70. What's their upside target if they get something tonight that they like in the market? 24.54.70. That's the number, the upper Bollinger Band, which is very near the recent highs that we've had, all-time highs. So this market's not acting bad at all. In summary, the metal markets are still acting bullish, not bearish. Gold is the least favorite of the group. The other metals look stronger than the gold market. Couple that with the dollar that went down, hit the lower Bollinger Band, closed under it yesterday. And what are the odds of staying under a Bollinger Band? Only 5% of the time do you do it. So you bounced back. That does not mean this market's bullish. This market is oversold in a downtrend. It has now got 2 days in a row of hitting the Bollinger Band. If it falls back to it after the debate, it's telling you that the market might just hang at that number and try to work even lower. I have nothing here that tells me to be bullish unless you were to get over 93, 92 and a half to end the downtrend, but even that wouldn't be a bull sign. I have nothing to be bullish about. In the mornings, I start you off with all these ideas, and the idea here is that I want you to bounce your evening ideas off me. I'm going to talk to you the short term, a swing trade. What is a swing trade? It's a trade that moves in that V formation until it runs into one of the resistance points, and I'm going to talk longer term positions. Now, how I do it, during the day what I'm doing, I'm going to give you in the morning most often the swing and the days, what I'm seeing going on, where you should be with the market, what to do. On the weekend, you're going to see me right there with you, and what I'm going to do on that weekend is I'm going to give you ideas to hold the longer trade, what I think's going on there. Because I get people that want both, so I cover it. And there's no point in doing a new daily chart every day. It changes on Friday. That's what we want to look at. So I cover it all, and if I think there's something important on the day charts, I'll bring it up to you. How do you get this information? I charge for it, folks. Not free. Your doctor's not free, nor is your lawyer. You want this? $7.95. Go look at other services. There's nothing like this. Who's putting these out 6 days a week for you? Nobody. And you're getting me. And if you're watching me, you obviously like what I'm doing. Go to our website, read about it under the word research, and sign up there. If you have friends that you think will learn from this video, turn them on to our channel. As I said, we crossed 10,000 subscribers. We're growing daily, and that is the thing I've always wanted to see. So we're on a bit of a roll. And if you get my full subscription where I'm writing about trades, tell me that we haven't had a pretty good hand recently. By the way, that can change like that. You know it. But it's been an interesting time if you wait for setups and you cross your fingers, maybe light a candle or two. I'm Ira Epstein. You have a good day, and I'll talk to you tomorrow.